Good morning, everyone. Can you hear me now? Testing, testing. Okay, we're good? Hey, Terrence, how are you? Good stuff. It's been a long week. I keep forgetting to turn on the headset. So, welcome everyone to our Microefutures 101 Markets course. Now, when you join the room or if you're on our live streams, there's some things that I talk about quite a bit. And one of those things is the concept of inventory. Now, if you have a store and say you're selling oranges, you have an inventory of oranges. You'll also have something called a cost basis. How much did you spend to buy those oranges? So let's say you buy them at 10 cents. And you have 1,000 oranges at 10 cents. You put them on sale at 80 cents, right? And you're trying to sell them or retail them out at 80 cents. And then when people don't want to buy it, you put it on sale, right? So you can get rid of the oranges before they go stale. Simple. Same thing is present in these markets, okay? These markets have an inventory of goods. Also, the market in itself is all inventory. So here it's ES contracts, okay? And the chart shows you the accumulation and distribution of that inventory, and it tells you how business is going. How are sales going? Are they going well or are they not going well? Okay? So I've gone back in time here to show you how we use, this is just a simple 5-minute candlestick chart. I've got volume profile on here to show you that when a market sells off, you'll see it goes sideways here and some volume builds out. As the market takes that low right here, it starts to fall, right? And then it hits this area where it starts going sideways. We call this two-sided trade. Okay? And that's what we call a balance zone. Now, as the market trades and goes sideways, I want you to look at the volume. Let's go take a look at the volume under, let's just arbitrarily say 5680. Okay? Look at the volume under 5680 and see how that volume builds out. Okay? That is building the inventory. See? Does everybody see that? Right? We are establishing our inventory. This is like you go to Costco to buy all the stuff you're going to sell in your convenience store. Right? So when markets fall, and this is good for you guys to know, the normal course of business when markets fall is you'll build out that inventory, and what happens is short sellers will come in and cover down here. And then wholesale traders, once they see those short sellers covering, they'll start building long positions on top of those short sellers because they know that there's buyers now, right? So they'll start buying. And then we get a little move back up to sell that position. Now, when the market runs out of buyers, we're going to take that and we're going to bring it all the way back down to cost basis. So you'll notice that this low doesn't really take out that low where the short sellers were bid. Do you see that? It's very clear. It's very clear. Once you know what to look for, see that low? It comes right down to cost basis. So the trade idea of going long at the bottom of the cost basis is a valid idea because the selling, the liquidation, has slowed down and those sell orders are now complete. That's the basis of what we call the look below and fail. So if we are trading, what we're going to do is we're going to try and, let me just draw new levels here for you folks. Okay? So what we'll do is we will try and find a cost basis for the market. And what we're going to do is we're going to look at two-sided trade. Okay? So this might be a little rough. So we're going to look at that cost basis. That's what we paid for all this stuff. And what I like to do is I like to go and I look for highs and lows that match up. Say like those highs and those lows. So when you hit that high, you rotate back to that low. And then when you look below that low, you go to that high. When you look above that high, you go right back to that low. That is that two-sided trade. When a market falls, the market goes back and forth like a vacuum cleaner, picking up all of the contracts that are falling out, or all the stock that's falling out, whatever you want to use. So once you have a cost basis, we'll go and we'll double that cost basis to get us some targets. So the cost basis here is 60 to 76, and we will now double it to 5707. Okay? So this helps you set up trades because once you have a cost basis, here we do the look below and fail of 5660. Here when the market liquidates, there's a beautiful look below 5660 and fail. So when it fails and comes back up, you buy above 60, like say 65, put your stop under 60. Your first target will be the middle of the zone, which is 68. Your second target will be the top of the zone, which is 76. This is how you use the concept of inventory and cost basis to put trades together that make good business sense. Does that make sense? Does anybody have any questions about that? These are the basic concepts. Okay? And it's kind of interesting. Yes, the stop loss should be that level. Now, this is a good question. Why would you put the stop loss here? Right? The reason why you want to put that stop loss there is because the business reason for the trade is the fact that you are buying inventory above 60. So if it takes out 60, right? Now remember, these are 5-minute candles. I usually trade off a 1-minute chart. So let's go make this bigger and show you. This is the look below. This is the fail. So I don't bother with it on the long side until it gets over 60.5. Right? So here I'll probably buy it. Now, am I going to get the low of that candle? Let's be real. No. Okay? So say I buy 65, 64. I'll use 60.5 as my stop. Because if the market has to sell under 60.5, the business reason for my trade, the business reason being there's nothing for sale under 60.5, that business reason is now gone. Does that make sense? right? So once the business reason for the trade is gone, there's no reason for you to be in that financial transaction, right? And this gets rid of the hoping and the wishing it comes back up if you're long. This also keeps you from adding to it because you don't know where the bottom is. So there's no reason to add to a bad financial transaction, right? That's like you buying a car where the engine's blown and then you go buy another car with a blown engine to fix it. It's not going to work, right? So you have a common sense way to manage risk, right? Now, there's some other things that we can do and to be aware of. We like to trade from zone to zone. So I love this look below and fail. This is a look below and fail. This is a fail to look below, which works nicely. Okay? And it's the rotation from the bottom of the zone to the top. Now, of course, in markets like today, where you're looking for shorts, right? We can do the look above and fail. Now, this is kind of cool because it helps us from getting trapped short. And I'll show you in a second. Say we go into the next zone, right? The double of it is 5707, and then we'd put 4 of these on top of each other because it's just doubling the cost basis. So it's 2, 4, 8, 16. You guys got that? So if you have 2 of them, then you get 1, 2, 3, 4. Not bad, huh? So it gives you a target. So once you do a look below and fail of 5707, target's 5697. And so if you go long, right, once you establish, how you know to do that trade, like for here, when the market comes underneath 5707 and comes back up, you go long, right? Your stop is underneath 5707, or you can put it underneath the bottom of that candle, right? Now, once I'm in the trade, say I buy 10 contracts at 57.10, I'm going to immediately put 2 for sale at 16, right? So the step is, Terrence, buy, stop, right? First step is to buy order, put the stop in. As soon as that buy order gets executed, you put your first sell order. So here, say you're long 10. Okay? Here, at that first level, just under 16, I'm going to put 2 for sale. And then I'll put 2 for sale here, right? Now, and I'll put 2 for sale here. Okay? So, here's the thing. The way I trade, if you give me a 57.10 long and a 57.28 out, I'll sell all 10. If you wish to hold the trade, you can use the levels to get out. Now for short sellers, if you miss this, if you miss the long, instead of shorting here and here and here and getting stopped out, right? This is called shorting the front end of the move. What you want to do is you want it to look above 57.69 and then fail, right? So when it looks above and then comes back in, then you can put your short on and you have a place to put your stop, right? You have 57.69 to put your stop, right? So say you short 10 here, you can buy back 2 here at 60. Buy back another 2 here at 53.5. Buy back another 2 here at 45. And as soon as, and so the sequence is the same. The execution sequence is the same, right? So execution means it looks above and it fails. So I would be shorting probably the top of that candle if I can get it, right? Everybody says short 68, 69, but let's be reasonable, right? I'm never going to hit the top. So say I short 63, right? What I'll do is I will put my stop at the top of this candle, right? My stop's going to be the top of that candle, right? So I'm short, stop, and then I'll put my buy orders in so when the market goes down, it hits me. I'm sorry, what are the intermediate zones? When you double the zone, I like to trade from the edges, not the middle. Some people trade from the middle and you can do that. But I like to wait until it hits the edge. I am looking to sell as soon as I go long. I'm looking to sell. Going long makes you become a better short seller, Terrence. Why? Because you are looking for competition. If I'm selling something at $5 and you come and undercut me at $4.90, well, I'm not going to make any sales, right? So I'm going to go $4.80 so I can capture your customer, capture the buyer. Okay? That is what we're looking for when we're a short seller. We're looking for the market to tell us that the sellers are competing because the top of each candle will be lower, right? Because the sellers are price competing because they're all stacked up at 69. Nobody wants to buy it. They lower their price to 64. Nobody wants to buy it. They lower their price to 56. These are 5-minute candles, right? So you don't want to short the front end of the move. You want to short the back end when the seller has shown themselves, right? And that's going to be very, very helpful in these markets as we go ahead, right? So your execution plan is business orientated. Your risk is business orientated. So if you were short here, say you're short, excuse me, say I'm short at 60, 61, 60, 62. I am going to have, and if I'm trading and it's a bit more volatile, I'm going to put my stop here at 64, 64 half. If the market takes out 64 half, right? If I have a larger account, I might let it work till 69, but if the market starts offering over 64 half, 65, 66, I know that the seller there has seen buyers and they're willing to raise price, right? Because they must raise price because that's business, right? So if I'm selling at 64 and a half and 3,000 people line up to buy, I'm going to raise the price. Once the price starts going up, and and if you were trading a big account, 69 would be your out. There's no reason to be short if it takes out 69 and especially 70, the top of that candle. So there's a business reason to be in the short, and the business reason is that sellers have to sell under 69. Once sellers increase the price that they're willing to sell, they're signaling to you that buyers are here. There's no reason to be short. So you're stopped out, right? So your trade is automatically cut because the business reason is gone, right? You're selling parkas and it's 80 degrees Fahrenheit out. There's no business reason for you to be selling parkas and gloves, right? So it's got to make common sense. This way your trading makes sense. You're not invested in some indicator or waiting for somebody to tell you when to buy and when to sell, right? So when you're long, You know when to sell when you see competition, right? When you're looking to short, you know when to cover because the shorts are pushing the price down. The shorts are trying to ride that movement down, and the people who are pushing the price down are the longs because they're selling and undercutting and undercutting and undercutting and undercutting. And that makes you a better short seller. Okay? So those are the concepts that we teach, right? So this keeps you from FOMO. This keeps you from over trading, right? Because you only do business here or here. You don't mess around in here. When the price exceeds the balance zones, you just keep doubling them. Now, today, I had balance zones and we had a big drop, so I redid them. Right? So if you look at today's recording, Terrence, you'll see me redoing the balance zones. Right? So those are the primary concepts that we look at when we're doing this. Now, let's see. Right now, this is when we were way up at 5,700. So if we scroll to where we are now, right, you'll see that liquidation. Now, today is a little different because, yesterday, the last couple of days, we've had this tariff stuff, right? But the same will still apply. If you get stocked out of the look above and fail, sometimes you can be early, Slippy D. You can be early. I'm early all the time, right? I'm early all the time. So what I do is I trade small, and when I'm early, I get the heck out. Let's go take a look at a live shot. Here we just had a nice look above and fail, right? Look at that. The market came up, right? We had a little one here where we looked above and failed, but that's why you put those buy orders in, right? Because if it looks above and say you're short 27, 28, and you have a buy order down here, right? Well, if it doesn't get filled, it gives you market intelligence. Are you early? Everybody, like some people trade late, Terrence, and some people trade early, right? I always tend to trade early because I've been trained to be a fast trader, and my clients scream at me if I don't pull the trades off quickly enough. So that doesn't really help in retail trading. Sometimes I'll try and, you jump the gun, right? How do you know that the look above and fail won't get retested? That's why you have your stop, right? So like right here, if I do it once or twice and I get stopped out, then I'll stop trading for a second and wait and let the inventory get long and build up. And then when you see how the candles are getting higher here, and then you see that stop. That's a little bit of a clue, GeoCap. I don't know what the probability is. I don't keep numbers. But I know this trade works. And I know it works well when we have overhead inventory. Does that make sense? I haven't run the numbers on the probabilities of how many times it works, whether it doesn't. Right? So I try and do business, and if I get stopped out 2 or 3 times in a row, then I know to leave this area alone. Right? Then what I'll do is I'll wait for this, and of course, it's great to say I got this here, right? So once it comes down here and I can hit it here, put my stop here, I'll be a little late. I'll probably trade 60, 59, put my stop up higher, right? And then put my bids in, right? So it's not foolproof, but at least you have a business reason for taking the trade. Sometimes you're not supposed to be in the business, Sometimes the business is beyond your ability. Sometimes the order flow is not predictable. Sometimes it's very unpredictable order flow. Right? So in all of those situations, you adapt, right? So if you have a way of doing things and you do the same thing every day, well, when the market changes, some things won't work. So when things don't work, it's like a warning light on a car dashboard going low oil. There's something that you have to adjust, right? Does that sort of make sense? So this is a way of having awareness of what's going on in the business where you're trying to make money. And if you have an awareness of what's going on in the business, you're further ahead than most people. You got to put in the reps. Exactly, Terence. You've got to put in the reps. Any questions? These are the simple concepts that we use, right? If I get stopped out 2 or 3 times in a row, you stop trading for the day? Usually. How do you come up with the balance area? You look for two-sided trade. I redid the cost basis levels today, Corey, when we dropped. So I'll show you. My initial cost basis levels were up here, right? They were here. And then the market fell apart. So we were doing business up here earlier. Sorry. Dang it. One sec. So we were doing business up here and I had a cost basis. I'm not sure if you're still in my room or not, but we had a cost basis and then it dropped, so I redid the cost basis here. What happens if inventory is above and below you? It all depends on the order flow, Terence. It's a good question, though. Right? So there's nothing that is absolute in a market. Right? There's nothing that is 100% guaranteed. It depends on the order flow. Now, the order flow means the customer's coming in. I draw my levels to look for two-way trades. Exactly. What is two-way trading? Two-way trading is wholesalers running what we call a box. Right? So let me just get rid of some of this stuff here. Clean out VWAP. Right? So right here, you get used to doing this. So right here, I immediately see that there is a balance zone here. Do you see that? So what I'm doing is I'm looking for that rotation. When the market, I'm looking for high and a low. And when the market looks below that low, does it go back to that high? And when it can't take out that high, does it rotate back down to that low? It works on every time frame, Johnny, because the business never changes. So I like to trade on a 1 minute chart because I trade fast in and out. You could use a 5 minute. I initially started doing it the way Dalton taught it, was using a daily. And then I realized because the business never changes, we just want to look at how business is transacting on a minute by minute, 5 minute, half an hour basis. We can use whatever time frame. Right? So what's going on is the wholesalers, they're buyers under this level and they're sellers here. So here they're bid, 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 bid. As soon as it gets over that level, they're on the offer. Right? And they're using that. And then when it breaks, right, when we drop, then you just take that and double it. So you can use accumulation balance, you can use distribution balance, whatever you prefer. Right? So I used this balance when we fell, and then I doubled it to the downside. Here you can see we used another little balance zone just to show you how we did it, right? Cost basis and balance works on cryptocurrencies as well, right? They work on anything where there's an inventory, right? So I've got 80,000. Where's my balance low on crypto is around 81,500. My balance high, just where we're working that zone, is around 84,400. So if you look at BTC, it's kind of banging around in between there. Works on ES, NQ, CL, currencies, crypto. I've got levels for Ethereum, for all the stuff that you guys like. The 1 minute chart is great to learn on because it makes you think quick and it makes you get out of bad trades quickly, right? And you understand the business. And usually, okay, now we've got, 14-minute candles on a 1 minute, but usually you can't get hurt too badly with a 1 minute chart. So now we're looking for the market to come and rotate down from 52.68 down to 51.99. Does that help you guys? Is there any questions? So these are the kind of concepts that we talk about. Any other questions? Yeah, I was just trying to show you the volume areas just to show you where the cost basis is, right? For ES, is a 10-point stop too much? I would think so. It means your trade location's not the best. Now, in a volatile market, you might have to use a 10-point stop. If a market's volatile enough that I have to use a 10-point stop, I'm not interested. Does that make sense? You know what your stop is? It's a business expense. So there's the cost of doing business, right? And you have to determine, as a business operator, what are you willing to pay to do business? Now, of course, Walmart has larger business expenses than a mom and pop store, right? They have scale. So just like their profits are scaled up, so are their expenses. Does that make sense? Any questions about what I've been talking about? Do you guys understand? Do you adjust your position size based on the stop loss placement, or do you have fixed lot size for the rest of the day? Usually I'm trading 3 to 5 contracts, sometimes 8 to 10, right? On days like this, I size down. Yeah, Chance, the cost basis and right, you're in my coaching class, so when you get back to wherever you were traveling, right, DM me and we're due for a one-on-one, right? Do you find that after a balance zone, do you find that after a balance zone, once that zone gets broken, it will quickly go to the 2 times? It all depends on the order flow. It all depends, Geocap. Sometimes the market's really slow and boring. Sometimes there'll be volatility like today, right? Can you talk about when not to trade? When do you know right off the bat that you should let the market makers do their thing? Um, that's a great question, Marcia. For like things like trying to find the low on the day, leave that alone. When you look below the overnight low and come back up over it, let the big traders work that level out. When you come to a level that you're watching, that a lot of people are watching, let the large traders work that out. When you don't trade, do you know some of those Globex nights where the 1 minute candles are like 1 or 2 points the range, and you'll have like 15 minutes of chop within a 2 point range? Don't trade that. That's a wholesale time of business, right? That's a great question. That's a really, really good question, because sometimes the business is set up for wholesale, and then sometimes that business is set up for retail. And knowing the difference really, really makes a difference, right? So a lot of the times, right, you want nice big candles to trade, decent size. But when you've got 2 point chop, oh, it's a pain. It's a massive pain. Here, I'll show you like stuff like this, right? So if you have like really choppy stuff, like, do you see this right here? 58.23 3/4 to 25. I don't want anything to do with this, right? And of course, we only take trades when our setup presents itself. So if my setup's to look below and fail, like here, this is where I'd be looking to take a long, right? Here it kind of looked below and failed and stalled. Then it looked below again, and on the second fail, it would have been nice to buy 5201, 5202, and sell 10. Sell 8, 9, 10, 11, right? Make 5, 6, 7 points. That's beautiful. right? This was a classic look below and fail, right? Here was the where we tried and it stalled because the sellers stepped in. Here we did it again and those sellers saw buyers, so they lifted their offer, right? The other concept that we look at is the concept of watching the offer. Watching the offer tells me where the seller or sellers, where they are coming in and competing. See, they were selling here before and it pushed the market lower, right? They were selling here. So they're going to sell there again, right? You should practice reading the chart as simply as possible. Sorry, Telek, I didn't see your question. I thought you were asking. You were asking Aubrey. Yeah, initial balance is first half hour. I don't use it myself, right? This is a very simple way of trading, right? And the most important thing is you're going long because the business reason for the trade is that the sellers don't need to sell under 51.99. So I can buy 5200, 5202, 3, 4, right? My risk is here. If it breaks 99, I know that they have to put the price on sale, and there's no reason me owning inventory at 2 or 3. Make sense? Can you talk about how to delve the nature of selling and buying? Selling first comes from trapped longs. So if I sell you, right? Let's say you come to me and I sell you 500 contracts at 52. Let's use this example here, right? Say you come up here and you're looking for product, and I sell you 5,000 contracts here, okay? Now you're expecting this to happen, right? As soon as you start to sell and I see you sell, because I'll be selling 52, as soon as you jump me on the offer, I'm going to go 50. Then you're going to go 59, 49, then I'm going to go 48. Then you're going to go 47, then I'm going to go 46. That's what creates that movement lower. So the first people to sell are trapped longs. The second people will be wholesale because they're just going to take their legs out. And then they'll force you to sell it to them at lower and lower prices. They sold to you here. They're going to buy it back on the way down. That's market making. Is that okay with you guys? So that's basically, I won't keep you guys too long. I know it's Friday and you want to go do things and have fun. Enjoy your weekend. Market makers have to buy and they have to sell, GeoCap. Their job is to provide liquidity. Assi, I don't understand your question and I don't know how to answer it. Sorry. I don't have the answer to that question. When you stop trading after 3 losses in a row, I'll get up and walk away from the desk, go do something else. When would I continue trading? When I come back and do some test trades, and if they work, okay, I've adjusted. I always like to take breaks. I don't like to sit in front of the screen for 5, 6 hours and not move, or stand in front of the screen and not move. I like to get in, I like to get out. If I'm not doing well, I've been doing this for 33 years. Okay, I started in 1993, 92. And so I know that tomorrow's another day. Right? Also, sometimes I might trade horrible in the morning and I might be able to trade okay at night. You know? So there's never a rush for me to take a trade. Right? I realize that trading is like fishing. Sometimes you go and you don't catch any fish. That's life. Do I trade stock? No, I do not. I take companies public. I'll happy to liquidate your stock for you if you're an insider, right? I I don't I don't trade equities. I trade the ES. I don't trade anything else. I trade the ES for income, and I'm not knocking people who trade multiple markets, but I'm a great believer in trading one thing and knowing to do one thing well. Right? I can make enough money from the ES that I don't need to trade anything else. Right? And some days you don't make a lot of money. Sometimes you don't make any. The trick is not to lose. Right? The trick is not to lose all your money. I do not trade stock. I don't like shorting stocks because you got to pay borrow fees. And every stock has different order flow, right? I like making markets in stocks that I've taken public, right? Because it's my baby. I know the order flow. We know when the buying's coming in, and we're liquidators, right? I'm a liquidator, right? I like to take 100 million shares and sell it over, 2 years. That's my business. See, I don't understand your question. Okay, you actually answered your question. Now you're asking me something. Okay, we know it's trapped inventory for above. We also know that somebody bought it under 5,200 and they're selling it on the way up. Great. Business is always the same. But do they conduct that differently when they get to levels? Well, it depends on who's buying there. So if I'm long at 5,200 or under 5,200 and it gets to 5,200 and I see people competing with me to sell, I'll start lowering the price of my product, right? Does that make sense? So you conduct business differently when you see competition. I hope I answered that correctly. Right? If I've got 1,000 contracts for sale and you have 1,000 contracts for sale, we are both trying to capture the buyer. Now, if 30 other people show up with 1,000 contracts for sale, do you see what I'm getting at? Does that make sense to you? Hey, Eric, what's up? Thanks so much. Pennsylvania, cool. Steelers fan. Any other questions, folks? My way of trading works for stocks. It's all the same. Remember, guys, it's a market. So whether you're selling apples or oranges or cucumbers, you have an inventory, you buy it at a certain price, you mark it up, and then you put it on sale when you can't get rid of it. Right? Oh, hi from Dublin. Cool. Well, hello from Liverpool. Do I have fixed risk management? It's pretty fixed, right? So like I said, when I take a trade, if I'm long at 5200, 5203, right? If you sell under 51.99, I'm gone. Goodbye. So it's pretty fixed. It's structural. It's based on whether the trade makes business sense. And that I think is a fixed thing. I'm not flexible on risk management. That's why I've survived 33 years, a quintuple bypass, my partner stealing millions, right? All risk management. It all depends on the situation, Asi. Don't know what you're really looking for. Maybe DM me and I can help you. You know, I don't really know what are you trying to get at and how is that going to make you money? That's the question I got to ask you. So you see stabilization at 52.68. What are you going to do? What are you trying to do? What is your trade setup? Do you have a trade setup there? You're trying to do nothing. So you're just asking the question. There's no like practical aspect to the question? Brother, I'm trying to help you out. You know, if you want, you can DM me and I'll try and help. But I don't think I'm answering your question in the way you want me to. Hey, Mark, thanks for tuning in. We appreciate it. If that's it, I'll pretty much let you folks go. Have a wonderful weekend. Please trade safe into the close. We have a whole room about risk management in our Microefutures room. You know, it starts with the stop loss and then expands. We have a CFA who runs that room and he's great. Thanks everyone. Have a wonderful weekend. If something crazy happens on the weekend, we might see you Sunday night. Otherwise, Monday morning. Do I participate on market on close trades at the end of the day? Dear God, no. I don't want to have anything to do with that nonsense. I want to be long gone by the end of the day. Right? I don't trade the last hour. Right? I don't like drama. I like to make a little bit of money, go away. Make a little money, go away. And then just go away. Right? I don't want drama. If I want drama, I'll go put together deals with gangsters and stuff like that. Right? Or I'll write a TV show. Right? Don't want it. Don't need it. Too old for it. I do not trade options. I have a funny options trading story from 1997 where I was sick and my partner did an options trade for one of our clients and the client didn't have any money in the account. And they settle same day. And she didn't show up for work the next day. I got in there was a $70,000 debit in the account and my boss was screaming at me. And I said, if I ever trade out of this, I swear to God I'll never touch options again. And we ended the day with a $1,500 loss from a $70,000 loss. And that was just luck. That was not skill at all because I had no idea what I was doing. The guys at night, Trimark, saved my butt, and I haven't touched options since. How many trades do you take in a day? But in our room, we do have people who are good at it. How many trades do I take in a day? 3 to 6 tops. And like what I like to do is I like to make my daily bread. And if I see like I'm always checking myself, right? Because I've had the humility. This market and the people in this market over the last 33 years have beaten the humility into me, right? Before 9/11, I was rolling. I had 2 Porsches, a penthouse, a brand new motorcycle. After 9/11, hey, my boss got arrested for trading for the mob, right? I was persona non grata on the street. Nobody would give me a job. I ended up working for a stock promoter who looked like Colonel Sanders, and I had to take the bus to work and live above an Irish bar. So I take very small losses because I don't like to lose money. I like to make a little bit. If I can't make a little bit, I go do something else to make money, right? I'm cheap. What makes me do this as far as helping others? Well, I've done 200 IPOs, and I have dumped billions of dollars of worthless stock into the U.S. markets over the last 33 years. So it's time to do something to give something back to all those people I dumped worthless stock onto. It's a karma thing. It's usually a fixed target geocap. It's usually a fixed target. I said carpet. My girlfriend wants me to get the carpet cleaned. That's what's on my mind. So yeah, it's a fixed target. Sometimes I'll do better. Sometimes I'll do worse. Sometimes I'll take a little bit of a loss and I stop. See, because I know that the market. See, I was trained by these savage old men, right? Like the guy who owned my brokerage firm. He was worth $600 million. He was 74 years old. He took the bus to work every day. He bought 3 suits for $99, and he charged us for coffee. Even if you made him $500,000 a month, he would still charge you for coffee and photocopying and staples, right? So I was trained by these savagely cheap old people. So I'm very cheap, right? I like to scalp because I do a lot of teaching. I have coaching. I do one-on-one coaching. I have the room, right? I also consult for public companies and companies that want to go public. So I try and have multiple sources of income, right? Average time in trades, hopefully less than 3 minutes. In this market, sometimes it just takes a minute or two, but usually not longer than 5 minutes, right? As Danny DeVito says in Other People's Money, I am not a long-term player, right? And when you've got candles that, go from 5200 to 5216 in a minute, you don't really need much more. I mean, look, if you make 3 to 5, say you make 3 points on a trade, it's $150, right? On 3 contracts, that's $450. If you can bang that out every day, there's 20 trading days in a month. Do the math. A little here, a little there. I used to have this old Italian client when we were doing deals. He'd say, listen, kid, don't be greedy. $1 million here, $1 million there, it adds up. Don't be greedy. You'll be surprised at how much $200, $300, $400, $500 little hits, right? If you add those up over a day, over a month, it's income. And it's not stressful, right? I do trade MES. Every day I start the morning trading MES, the micro, to test myself to see whether my brain is working. If my brain is not working, then I don't step up to the ES. I use the micro to test myself. and to test the market, but more to test myself. Because sometimes human beings, and I'm no different than anybody else, will have some stupid cockamamie idea or a bias, and I'd rather take it on the micro and lose $30 or $40 than 400. Do you think it's personality based to be cheap? I'll tell you something. You guys would be a lot better off if you embraced your inner cheap old man. Now I'm young. I'm old, right? You guys might be young like Eric, right? If you're still a power lifter, you're probably young, right? I'm 57. So when I was a kid and I asked my dad, hey, Dad, can I have $20? He'd go, $20? $10? Why do you need $5? Right? So we used to have, I grew up in Saskatchewan in Canada, and, we would have contests to see whose dad was the cheapest. Right? And being cheap was like a badge of honor. Like, my dad's cheaper than yours. We'd have these contests. Right? So I take that into trading. Now, here's why. And I'm just leave you with this on a Friday. Right? When we lose money, it's hard. And you blow up your account, it's horrible. Okay? I've witnessed when brokerage firms blow up, right? Because risk is pounded into us. It's beaten into us when we start, right? Because when a brokerage firm blows up, people lose their jobs, right? So if it's a small brokerage firm, 50, 100 people, they're all out of work, right? You put people out of work, they can't feed their family, they can't pay their mortgage because some trader has done dumbass thing. So risk is everything. It's okay if we don't make a lot of money today, as long as we don't lose a lot and we're open for business tomorrow. Because over time, we'll make money. You just got to be alive. I don't know. I know a lot of people use that software, my goal, but I've never used it, so I have no idea. If you come into our room at Microefutures, we'll be happy. There's lots of people. We've got hundreds of traders, and they all use different systems, software, brokerage firms. Come in and ask around. All right, folks. I'm sure you're tired of hearing me talk. I kind of went on a little bit longer than I usually do. Thanks, everyone. Have a wonderful weekend. Please get out there and enjoy the sun. Oh, yeah, Paul was talking, eh? Let's see if we could just close nicely and calmly without any drama. Right? It's a beautiful sunny day in Liverpool. I've never been to Dublin. I've been to Belfast. He's still talking? Thank you so much. Have a wonderful weekend. Do I miss Vancouver? I miss Vancouver in the 80s and the 90s. Vancouver in the 90s was great. It was fun. Now it's just expensive. But it's a beautiful place. Thanks, everyone. Have a wonderful, wonderful weekend. Heart's good. Heart's good. Thanks, everyone. Enjoy your weekend. Right? Remember, that's why we do all this crazy work. Go have some fun. You young traders, go out tonight and rage. Get into some trouble for me, okay? Send me some pics. Not naughty ones. Just of you guys having a good time. Right? Go enjoy it. Enjoy the spring. Much love, everyone. We'll see you on Monday. Bye for now.